Today is rather mixed for the altcoins, but there is one altcoin, the proof token with the Succinct project, that's outperforming. The question is why? Who is buying here? Who's selling here? Let's have a look at the on-chain data, the data most people are not looking at, to try to figure out where the price might be headed from here. Now, the rally is quite impressive. We are now at $1.52. The market cap is still below 300 million, so this gives us a sense of how much potential upside there might be. But this channel is very different from your average crypto channel. I don't just promote various cryptocurrencies where I took money from the project. I never take any money from any project. I try to look at the good, the bad, and the ugly. And the tokenomics of the proof token aren't that great, unfortunately. Here is what I mean with tokenomics. Tokenomics describes how the supply over time of a project develops. So sometimes a project gets launched and gets funding from early investors, and those investors can cash out with a time delay. They get token unlocks, they have vesting periods. The same is true very often for the team. The same is true potentially for some users of the platform. And what we're seeing here with the chart on the right is the circulating proof tokens over time. Now currently we are at 200 million tokens, but at some point this will grow all the way to 1 billion. The supply will 5x in the next 5 years. A major unlock will happen 1 year from now. This is the first time where the research and development and the early investors and the team get access to their tokens. And so a chart like this shows us the minimum threshold of project growth, right? If the project can't grow that quickly, if the demand doesn't outgrow that supply, then of course the price has to go down, at least relatively speaking, to Bitcoin, Ethereum, and Solana. The assumption is that the project will at least double in size 1 year from now. Otherwise, it's a bad idea to get into proof. Now, what is Succinct in the first place? It's a very technical project. It allows other projects to implement zero-knowledge proof easily. So there are specialized projects on Ethereum layer 2s already. The technology is called ZK rollups. And apparently Polygon and Celestia are already using parts of the stack. But this channel is all about figuring out the future demand and supply dynamics, right? Because we want to figure out where the price is going. We have to find out what the demand will be in the future. So let's have a look at the current holders. Let's check out the on-chain data. Now over here, we've got the Ethereum-based token. There are almost 9,000 holders, which is not a lot. Here we've got the Binance Smart Chain. Here we've got a bit over 1,000 holders, even less. When we check out where the trading volume on-chain actually takes place, it's interestingly enough on the Binance Smart Chain, not on Ethereum. In the last 24 hours, we saw 11 million worth of trading volume on the Binance Smart Chain, but only $274,000 on Ethereum. What we see over here are charts that I like to look at for any token on this channel. It's the number of retail investors versus whale investors. The way we make this distinction is by looking at minimum holding thresholds. So to be counted for the chart on the left, a wallet has to hold at least 1,000 proof tokens. For the chart in the middle, it's 10,000 tokens. For the chart on the right, it's 100,000 tokens. Now what we're looking at here is the Binance Smart Chain data. Over here, we've got the same data for Ethereum. We can see that even though there's much more trading volume on the Binance Smart Chain, the capital really is on Ethereum. Most whales with at least 100,000 tokens are on ETH. They are not on the Binance Smart Chain. And we can also see that none of the wallet cohorts is currently buying. There might be a bit of acquisition by the whales recently on Ethereum, but that's it. Small retail is definitely not yet interested in the token. But really, the price discovery does not happen on chain. We do have a bit of trading volume on the Binance Smart Chain, but most trading volume happens on the centralized exchanges. Check this out. This is a spot market, and we saw almost $500 million with a B worth of trading volume on Upbit. That's then followed by Binance. And here's the really interesting part. Even more trading volume happened on the futures market, on the perpetual futures market. That's more than $1 billion on Binance. So that's levered bets on the price. It's derivatives. It's leverage short-term capital in the asset that can go in and out at any point in time. Because why do people buy on the perpetual futures market as opposed to the spot market? It's usually for short-term speculation with additional leverage, because holding a token long-term on perpetual futures is very expensive due to the funding rates, but getting in and out quickly is very cheap because of the small spread. So whenever there's more trading on perpetual futures, that's potentially a red flag. That means that the price is short-term artificially inflated. And I believe this is especially true for the Succinct token, for proof, because we had more than 1 billion worth of trading volume. But remember, the market cap of the project is only 300 million. So we had more than 3 times the market cap changing hands in value on the perpetual futures market. That's a lot. Now, most people on the perpetual futures market are betting on rising prices. There is now a slightly positive funding rate. There used to be massively negative funding, but that's then when the market manipulators bought up the price and squeezed out those shorts. We can see this in the liquidation chart, a lot of short liquidations at the time. The open interest is not necessarily growing anymore, so it seems like the leverage already starts to deflate somewhat. The trading volume also has a tendency of rather declining now. So my impression is that the proof token currently gets artificially pushed up by a few whales on the Ethereum chain and by a few whales on the perpetual futures. But that tends to now slow down. I don't think that Succinct will hit the $5 or the $10 mark. I think it's better to stay away from the token. I will also not get involved by betting on falling prices because, again, the small retail investor has no impact on this price. And I don't want to have the heavyweights, the whales, as my competition. And they currently have the interest to increase volatility, to increase attention in the asset. We go up fast, we might go down fast. We have seen similar moves in the past as well. I'm not getting tired to mention this. This is the performance of the smaller altcoins in the last year. Pretty much everything went down, while Bitcoin performed very well. Here, just as a reminder, right? Bitcoin in the last year doubled in price. How many of the smaller and more risky altcoins were able to compensate that risk, to actually outperform Bitcoin? This is 100 tokens here on the screen. We've got this outperformer over here. We've got this outperformer over here. All the rest underperformed Bitcoin in the last year. This is 100 assets, so 98 out of 100 assets did worse than Bitcoin. Now, there are 2 potential ways to deal with this. We could either just become Bitcoin maximalists. We just buy Bitcoin, maybe Ethereum and Solana. That's about it, and we forget about all of those other altcoins. But there's also a second way, and that is to take advantage of this mispricing. In the last 3.5 years, the market cap of the altcoins underperformed Bitcoin by 77%. And the reality is even worse than what this chart here implies, because again, this is a comparison of market caps. The Bitcoin market cap versus the market cap of the altcoins. But when we invest into an altcoin, we don't get the performance of the market cap. We get the performance of the price, and there can be a big difference. Usually there is a big difference. This is WorldCoin. This is the market cap of WorldCoin over time. And this is actually not that far away from the all-time high. But compare this to the price development of WorldCoin during the same time. This is very far away from the all-time high. And this is in the end what the retail investor is getting. Why is there this discrepancy? It's because of the tokenomics, right? It's more and more tokens that hit the market. It's the insiders that are cashing out. It's the early investors, the VCs that are cashing out. It's the team that's cashing out. So the teams get more and more tokens allocated towards their wallet, right? They get vesting unlocks, and then those unlocks get sold. So this is the WorldCoin supply over time, right? It moved from 500 million to currently 3.6 billion, more than a 7x in supply. That's what's causing this massive difference. That's why investing in the smaller altcoins is such a bad idea long term. That's why 98% of the altcoins did worse than Bitcoin in the last year. And this is a structural problem of the altcoin market, right? Everybody can launch an altcoin. Everybody can set up any kind of vesting unlock. The supply can grow however it wants. There's no laws around this. There's no regulation around this. And so, of course, the average retail investor gets milked over time. The altcoin market needs at least around 500 million, potentially more than that, maybe 600 million in US dollar inflows every single week in order to keep the prices just stable, right? This is the unlocks across the tracked tokens on this website. Without the demand coming into the altcoin market at that rate, we continue to see this kind of development because, again, there's just constant sell pressure happening. And so let's say our thesis is that this structure will not change, right? That the VCs will continue to dump on the retail investor, that the insiders will continue to cash out, that most small altcoins will continue to do worse than Bitcoin, Ethereum, and Solana. We could just stay away from the altcoin market as a whole, or we could try to make money from that. And that's what I'm personally doing. I try to take advantage of this opportunity. I'm trading in this way already for more than 4 years. And what we're seeing over here in black, that's my performance that I made compared to if I had just dollar cost averaged into Bitcoin. So dollar cost averaging is in light gray, and the black line, that's what I made. And this is just monthly data out of my personal Excel sheet. It's close to 4 years of data now. So the TLDR is that I bet on relative valuation. So I bet on Bitcoin, Ethereum, Solana going up, and I bet on all of those crappy small altcoins to go down, relatively speaking. I do 2 positions at the same time. Long, one thing, short, one thing. So in the end, the position is delta neutral. It's not impacted by the overall market that much. I used to do this with borrowing and lending platforms like Aave and Venus Finance. Now, recently, in the last 2.5 months, I moved this to perpetual futures. And that experiment is going very well. So here's the development over time. I started with 40K in balance and that moved to 60K. So 50% of return in roughly 2.5 months. And there wasn't too much volatility along the way while making those gains. I am sharing my own trades as well. So that example of WorldCoin, right? I actually made money from that. So I posted how I was betting on falling prices of WorldCoin, how the tokenomics of WorldCoin aren't that great, and doing a relative valuation bet might make a lot of sense. And so that was when the price was over here, and of course the rest is history. WorldCoin relative to Ethereum went down by 40%. And if you then have smart leverage, right? Leverage that is limited in risk because of the use of stop losses, etc., we can make a lot of gains. So this is then when the community copy traded that particular position. Yeah, I always like these kinds of comments, right? Premium has already paid for itself, etc. But the community does not just copy trade me, right? There's all kinds of opportunities, and those opportunities are shared in the different chats as well. And so there are 2 ways to go about this, right? Either you just learn it yourself, you do the active trading, you figure out what kind of altcoins are incredibly inflationary in nature, which kind of altcoins tend to go down versus Bitcoin the fastest, then exchange the ideas with the community and open up the positions yourself. So that's the best approach if you don't yet have that much capital, but you do have some time. So there are 2 essential videos for that. There is this one here, using perpetual futures on Hyperliquid to bet on relative valuations. And there's this video over here, risk management with relative valuation bets on Hyperliquid. So there is 2 tutorial videos among a database of all kinds of exclusive content. And so that's the do-it-yourself approach, right? That's currently $125 per month. And if you don't like premium, just message me within the first week and I'll refund you 100%, no questions asked. But if you're among the people that have a lot of capital, but not that much more time, that maybe have to focus on a high-paying job or on a business, and simply just want to allocate towards that strategy, then you can also just automatically copy trade me. This is still somewhat experimental, right? We just started this 2.5 months ago, but that's reserved to the people that subscribe to the annual membership, where, by the way, you also get savings of $250 per year. You can start out with monthly and then upgrade to yearly later, or if you don't want to learn from the very beginning, just start out with yearly, that's fine too. You will get all the instructions on how to deposit to the capital pool, and then all the trades that I make will automatically reflect towards your capital base as well. Of course, I don't have the guarantee that we continue to make money, but in general, I do believe that the odds are on our side. Again, we make money when the altcoins continue to do worse than Bitcoin and Ethereum and Solana. And I do believe that's a structural problem with the market. There's constant sell pressure across the board, and some assets are worse than others. And that's where the real outperformance is, right? It's not in the common strategies trying to find the next 100x altcoin, right? This is how everybody gets burned. This is how everybody loses their funds. Please don't make that mistake. Please do something different to the masses, right? If you do the same things as the masses do, then you get the same return as everybody else. And again, returns are very much concentrated towards just a few players in the market. The vast majority of people loses, especially trying to find the next 10 or 100x meme coin. A link to premium should pop up directly over here on the screen. Just click on that. It will lead you directly to the website. If it's your very first time here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.